statement of financial position. Statement of financial position is nothing but it is a statement which shows the financial position of the financial position of the company. And like yesterday I have explained you about the ledger account and the statement. So the balances.
Your screen froze.
Hello. Yeah. Yeah. Like please confirm. Can you see right now the screen? Can you see?
Yes, sir. Now I can.
Yeah. Just a second. So the balances on all remaining ledger accounts, including profit or loss account, can be listed and rearranged to form the statement of financial position. So the balances on all remaining ledger accounts, including the profit or loss account. See, you make the profit or loss ledger account, am I right? So you get the net profit, am I right? That net profit again would be going to which statement? Statement of financial position. Okay, now let's go ahead. Look back at the ledger accounts of Ron Knuckle. Now that we have dealt with those relating to income and expenses, which ones are left? So we have already covered the income and expenses related ledger accounts, am I right? So which are left over right now? So the leftover ones are what? Hello, are you following?
Yes, sir. Yes.
Those are cash, capital, bank loan, trade accounts payable, shop fittings, trade account receivable, and drawing account. So all this will come in balance sheet, correct? Because these are not expenses or incomes. These are assets and liabilities. All these are these the only ledger? No, don't forget, there is still last one we opened up called the profit or loss account. So profit or loss account had a profit of $2,000 that has to go to capital account. Now, so these remain ruled off, but since they represent assets and liabilities of the business, their balances are not transferred to P&L. Instead, they are carried down in the books of the business. So this means they become opening balances for next accounting period and indicate the value of assets and liabilities at the end of the period and beginning of the next. That means what happens when cash account you have? This cash account will definitely show some balance. Let's say to balance brought down. Okay. Let's say the debit balance is more than the credit balance. The debit total is more than the credit total. What is that? Debit total is more than the credit total. So it shows a debit balance. Am I right? So what does it mean? It becomes the base for the next month's cash account when you prepare. Okay. Again, every month it will be going in like that way, and then you will be adding all the cash account. Then what will be happening? You'll be, this is the brought down balance. With this you start the next month cash, next month's account. Which account? Cash account. And what is the cash transaction?
Hello,
You
sir.
have
Sir,
you just post them in the cash. I passed away. You didn't say, okay. Yeah. Hello.
sir, could you repeat that, sir? Your voice is
Hello.
breaking. Hello, yes, sir.
Yeah, I'm saying, see, you'll make the cash account for January month, let's say. So you'll be getting balance brought down. Am I right? Hello.
Yes, sir.
This balance, whatever you've got in the cash account, becomes the this is the closing balance for the Jan month. Am I right?
Yes, sir.
Yes. Now this closing balance of Jan month will become the opening balance of Feb month. Am I right?
Right, sir.
And then again Feb month's transactions will be going on in that way. So in that way, every month's opening close, like every month's closing balance becomes the opening balance of next month, and you come in the December, you get the year ending balance. Correct or wrong?
Correct, sir.
Yes. Yeah. So now year ends balance, year ends closing balance becomes the next year's opening balance. That is a natural thing. So that's what they are saying here. So the conventional method of ruling of a ledger account at the end of an accounting period is illustrated by the bank loan account in Ron Knuckles' books. So this is a bank loan account. So you have this cash here, okay, which is $1,000, and then this was a credit balance, it seems, because it's a loan. Am I right? So what is the entry for a loan? What you take? What is the entry for loan? Cash to loan account. Am I right?
Loan. Yes,
Why
sir.
it is like that? Because you get cash, it increases your cash account. So increase in asset is debit, and simultaneously you have to make this payment. It's a liability. It increases the liability. So increase in liability shows credit balance. So that's what. So so increase in liability is credit balance. Okay, so you write this cash here, it's credit balance. Okay, it's increasing your loan liability, and then again carried on and then brought down. So this becomes the next month's. This is the closing balance. Am I right? This is the closing balance. Am I right? And it becomes the opening balance for the next month. Isn't it so? That's what. Now, so again, bank loan, it is in the credit side. So credit balance, okay. That means that you again start the next month's loan account with again $1,000 until and unless it is repaid. Okay, so that's what it is. So Ron Knuckle therefore begins the new accounting period with the credit balance of $1,000 on this account. So a credit balance brought down denotes a liability. An asset would be represented by a debit balance brought down. So that is what again they are mentioning. So a liability always shows credit balance. Asset always shows debit balance. So you see here it's a credit balance because your credit side amount or total amount is more than the debit side total amount. So it is credit balance. Now let's move forward. So again, in this way, this is drawings account, and you know, drawings account will always be transferred to drawings account amount will always be transferred to which account? Hello?
Yes, sir.
Which account? The drawings account balance amount will be transferred to which account? What is the
The
account?
capital account.
Capital account. And also the profits, whatever you earn in a year will be transferred to which account? Capital account. That's
Capital
the.
account. Okay, sir.
And yeah, and this is the capital account which has got the drawings. See, drawings, what it, see, capital basically is a liability. It shows a credit balance. So you started with 7,000, correct? And then what has increased your capital? The current year's profit that you have added to the capital account. So increase in liabilities credit, correct? So I put it here. And what will decrease the capital account? The drawings, because you'll be withdrawing money from the capital account. Am I right or wrong?
Yes, sir. Right.
So since you'll be withdrawing money from the capital account for your personal use, that's called drawings, and that will be decreasing the capital account. Okay, so you have 9,000 in the capital account balance and 1,500 you have withdrawn for your drawings. So you are left over with 7,500, and again the next year you start with this balance, that is the brought down balance here. That is the 7,500 capital account balance. Okay. So now, like this is the statement what they are making. Non-current assets, shop fittings 2,000, cash you have 6,500, and capital you have 7,500 which we calculated, and bank loan you have 1,000. It's a liability. You see, the total of assets should always be equal to total of liabilities. That is the rule, and that shows your balance sheet is tallied. Okay, let's move forward. So now see, I have already explained you. Assets are always debit and liabilities always credit. So shop fittings, if I want to put in trial balance, I'll put in debit. Cash at bank, I'll put in debit. Capital, I'll put in credit. Bank loan, I'll put in credit. See, so there's a trial balance here. So debits and credits. Okay, and you see the totals are matching. Am I right? Yes.
Yes, sir.
So the next point is balancing accounts and preparing financial statements. So let us see what is happening here. Business is established with capital of $2 million, and this amount is paid into business bank account by the proprietor. During the first year's trading, the following transactions occurred. So this activity actually you have to do. You have to pass the journals, you have to make the ledgers, you have to make the trial balance, and you have to even make the statement of profit or loss and balance sheet. Will you do this activity, or you want my help for this?
Try
This is the
doing
last
it, sir.
activity. Sorry.
I'll try doing it, sir. In the next class, I'll ask you if I have any doubts.
No, that is what my like. I don't purposefully. I don't want to do this because double entry system is done, and secondly, the subsidiary books, everything is done. So what I'm saying is, what you have to do, you have to start with this. It is cash to capital. So increase in cash, debit balance, increase in cash, that is increase in asset, and that is debit. Am I right? And then again simultaneously capital is always credit. So that is the first entry. Then purchases of goods for resale on credit. That means you purchase the goods on credit basis. So what's the entry? Purchase. It's an increase in it's increase in expense. Am I right?
Yes, sir.
Increase in expenses, debit to payables, that is increase in liability, credit. So you have the journal here. So first is cash debit and capital credit, and purchases debit and accounts payable credit. Understood? So third one also I'll mention you, payments to trade accounts payable. So decrease in liability, debit. So trade accounts payable, it's debit. And what is which asset is like getting decreased? Cash. So it is credit. Am I right? Decrease in asset is credit. So debit, credit. So
Yes.
payables, debit, and cash at bank, credit. Am I right? In the same way, other journals also you need to pass sales all on credit. So sales all on credit is what? So when you make sales, what comes to your business? Cash, but it is a credit sale. It is not cash
Receivable,
sales. So yeah, the asset which is
receivables
increasing here is
return.
receivables account. Yeah, receivables is like increase in receivables or increase in asset is debit, and there's an increase in revenue to sales. It is increase in revenue, which is credit. Okay, so
Yes.
credit is debit. So we put it here also, debit and credit. And then like payments from trade account receivable, so you got the money, so your one asset has increased cash, and your receivables has decreased, that is credit. So cash debit and receivables credit. Okay, and then again like non-current assets purchased for cash, so increase in asset, that is non-current asset, and cash has decreased to cash, that is credit. So non-current asset debit and cash credit. Okay, and again you paid some expenses. Like whenever increase in expense, it is debit. So expenses, and there's a decrease in cash, so credit. That's asset, decrease in asset, credit. So expenses debit and cash credit. Now you have to make the which account you have to make here? Ledgers. Am I right?
Right, sir.
Simultaneously you have to make ledgers for all these journals, tally those accounts, and you will get brought down balances with and you see any adjustments are given here. I don't think there's any adjustment. So those balances whatever you get, correct, like brought down balance in the debit side is always asset, and brought down balance in the credit side is always liability. Am I right or
Liabilities.
wrong?
Yes, sir. Right.
Yeah, so cash at bank, what you are seeing is like 3 8, this is 6,000, this is like your credit side is more than debit side. Okay, credit balance, so credit balance is OD, bank overdraft, isn't it so? Hello,
Sir, could you repeat that? And your screen froze, sir.
just a second. Yeah. Can you see the screen now, Mamsika? Hello,
Sir, it's still blank, sir.
blank. Now, now even.
Yes, sir.
Hello.
Still blank.
Okay. Yeah. Now how's the like? Are you able to see?
Yes, now I'm able to see.
See what I'm saying is okay. When you make the ledger of this is the cash at bank, correct? So you will start with what? Cash and capital. So you have started a business, okay? So increase in asset is what? Debit, am I right? So you'll put this in debit, so capital, correct? Correct.
Yes, sir.
And here again, what is increase? Yeah, here also increase in asset, debit. So you'll put trade account receivable in debit. Okay, correct. Now it is increasing cash account, and there is decrease in cash is credit. So here it is like because of trade accounts payable. So you put 3,600 here credit, and again cash here you are saying in credit because you purchase asset. So it is decreasing cash. So credit. Okay, again you made expenses, payment of expenses, so again credit. So now you have to tally this account, so we are tallying this account here. So when you see your credit total is 6,000, correct Hamsika?
Yes, sir. Correct.
And your debit total is 5,200, so there is a shortage here of 800. So credit total more than debit total shows credit balance, correct?
Correct, sir.
So here you have 800, so that's a bank overdraft I am saying you. What is that?
Bank overdraft.
If it would have come in the debit side, like 800, it would have been cash in the trial balance. But it is in credit side, it shows credit balance. It is bank overdraft, correct?
Correct, sir.
Yeah. So the same way you have to tally all the accounts, and accordingly after tallying you will get balances. You have to make a trial balance for that case, okay? And then you have to make a statement of profit or loss and a balance sheet. That's it. This is the end of the chapter. So what we have done in the previous past, based upon that only you have to do this question. Understood?
Yes, understood.
So now, just a second. So we will do a accounting equation question, Hamsika, okay?
Okay, sir.
So that's a homework for you. So let's discuss about the accounting equation. You already know that accounting equation, as per accounting equation, when we make a balance sheet, you have asset side, correct?
Yes, sir.
And you have this like capital and liability side. And then when you total capital plus liability and this assets, correct? This should always be equal, isn't it so?
Yes, sir.
So assets should always be equal to capital plus liabilities. That's the rule. Now, so we have already discussed about the balance sheet thing, correct?
Yes, sir.
So you have balance sheet here. So this is balance sheet. So I'll show roughly a balance sheet here. You can see now. This is
Sir, your
the
screen, sir,
asset.
again.
So your asset 5. Let's go to your capital, which is 7,000. God, I'm having bad time with signals. Again, I'm sharing. Please see. Hello. Can you see?
Sir, 1 second, sir. Still blank. Yes, sir, now I can see.
Yeah. So your asset side total is 8,500. Correct. That should all equal to the liability, which is 7,500 plus capital liability. Sorry, this is capital. 7,500 is capital plus liability. What is the liability? 1,000. Correct.
Correct,
So
sir.
assets should always be equal to capital plus liability. That's done. So this is the accounting equation. This is your capital and this is your liability, and both total is equal to 8,500. That is equal to asset total. What we are discussing here. And we have to prove this always, that this is always true. That's the last topic as per the new book. That's the reason why we are doing accounting equation. Then we can start with inventory in the next coming class. All basics done.
Yes, sir.
Yeah. Let's do this now.
Sir, your screen again.
So I'm again having this bad time with my signal. Shall we take this accounting equation class tomorrow?
Okay, sir.
No, if you want, I can still share my screen, but I don't know what is happening. I'll call here. I'll shift in another room tomorrow onwards to take the class, whereby I have good signals maybe. Right now, shifting is not possible. There's some other work happening in another room also.
Okay, sir. We'll continue tomorrow. It's okay.
Yeah, we'll continue the accounting equation class freshly and we'll take the entire accounting equation and wind up this. Okay?
Yes, sir. Okay.
Yeah, okay, Amsika. Sorry, this is not working out. Otherwise, I'm ready to take. Signal problem is there.
It's okay,
Okay,
sir.
I'll tomorrow onwards. I'll make sure
Yes.
that this problem should not prevail. Okay, okay, Amsika. Thank you.
Yes, sir. Thank you, sir.
Do the homework. Hello. Yeah,
Yes,
do
I
the
will.
homework. Do
I will.
you have the old book with you?
Sir, you've sent me a PDF, sir, of the F3
Okay,
book.
I'll send you the PDF. Okay, no
Okay.
worries.
Yes, sir. Thank you, sir.
Thank you, Amsika. Thank you.